The €3 million trap Spain's solidarity tax. Spain introduced the temporary solidarity tax on large fortunes, or the ITSGF, back in 2022. The government promised it was just a quick, 2-year emergency measure. Well, that temporary tax is officially a permanent fixture in the Spanish tax landscape. Today, we are breaking down exactly who pays it, how the math works, and a massive new court ruling that completely changes the game for non-residents. The mechanics, who actually pays. Let's start with the baseline. Who is on the hook? The ITSGF triggers if your net wealth exceeds €3 million as of December 31st of any given year. But there's a massive catch depending on whether you are a tax resident or a non-resident. If you are a Spanish tax resident, you get hit on your worldwide assets. However, you also get some generous cushions, a €700,000 general personal allowance plus a €300,000 deduction for your primary residence. This means, effectively, residents usually don't start paying this solidarity tax until their global net worth clears roughly €4 million. But if you are a non-resident or you're living under the famous Beckham law regime, you are only taxed on your Spanish situs assets. That means Spanish real estate, bank accounts, or shares in Spanish companies. The downside: non-residents do not get that primary residence deduction. The regional tug-of-war and the rates. You moved to Madrid or Andalusia because you heard there is no wealth tax, right? Because the autonomous communities there applied a 100% bonification rebate on the standard wealth tax. Now, why does this tax exist in the first place? To put it bluntly, it was a political sniper rifle aimed at regions like Madrid and Andalusia, which had completely abolished their regional wealth taxes to attract wealthy expats. They created the ITSGF specifically to override those regional holidays. The ITSGF is a top-up tax. The state progressive rates are 1.7% for wealth between €3 million and roughly €5.3 million, 2.1% up to €10.7 million, 3.5% on everything above that. Here is how the math plays out: you calculate what you owe under the state solidarity tax, and then you deduct whatever you actually paid to your region for standard wealth tax. If you live in a region with high wealth taxes, like Catalonia or Valencia, your regional wealth tax bill will likely wipe out your solidarity tax bill entirely. You owe zero to the state. But if you live in Madrid or Andalusia, where the regional wealth tax was zero, boom! You now owe the full federal solidarity tax. To keep that tax money from going straight to Madrid's central coffers, regions like Madrid and Andalusia actually revived their own regional taxes just enough to offset the ITSGF. The bottom line: no matter where you hide in Spain, if you have over €3 to €4 million, you are paying a wealth tax. The game changer, the 60% tax shield. But it's not all bad news. There is a massive, game-changing legal update you need to know about. Spain has a famous mechanism called the 60% tax shield. It states that your combined income tax and wealth tax cannot exceed 60% of your total taxable income. If it does, your wealth tax bill gets slashed by up to 80%. Historically, the tax agency claimed this shield only applied to tax residents. They left non-residents out in the cold. Not anymore. Following landmark Supreme Court rulings, the Central Economic Administrative Court (TEAC) confirmed that the 60% tax shield applies to the solidarity tax for non-residents too. If you are a non-resident with high-value property in Spain but relatively modest taxable income, your ITSGF bill could potentially be slashed by up to 80%. Even better if you paid this tax between 2021 and 2024 without the shield, you might be entitled to file a retroactive refund claim. Spain's solidarity tax is here to stay. Don't forget to hit that like button, subscribe to the channel for more straight-talking Spanish tax updates, and I'll see you in the next video.